Now, despite all the global anxiety, the markets are just shrugging everything off. Joining us today, again, former Goldman Sachs partner Peter Kiernan, and as always, Ashley Webster and Elizabeth McDonald. Peter, I'm asking everybody the same question for the past week. The world's in turmoil, nervousness, anxiety, terror, etc., and the Dow goes up 5 consecutive records. What's going on?
Well, I think they like what we've got. And secondly, it's becoming more a market of stocks than a stock market. If you disappoint, you get crushed. If you have good forward-looking momentum, you're going to get invested in, and that's going to be popular. So it's that combination that's driving the market up.
But what about the central banks, the big banks around the world, which we are told are pumping money into the system like there's no tomorrow?
Well, they've really left the investor with no alternative. As yields get crushed to negative numbers in at least 10 trillion examples I can think of, you really have to look for where there is growth. I think the outlook is so important. How people do in the second quarter, interesting. How people look to do in the third and fourth quarter, crucial. That's where you should be looking.
Would you say that people who are fresh to the market, they've got some money to invest, should they put money into stocks at 18,547 on the Dow?
Toughest question you can ask. I think what you have to do is look for places that have special stories that can carry on no matter what happens in the environment. There are many companies like that that seem to earn through thick and thin. J&J is one you mentioned.
Yep.
Those kind of stocks, they're good for banking for the long term.
Okay, now take a look at Netflix. There are a few negatives surrounding this stock, and it's falling out of bed today, 13, almost 14 percentage points down. Peter, we had a buyer and a seller earlier on the program today. Mike Murphy said, buy that thing, it's a bargain at 85. Everybody else was saying, don't touch it with a 10-foot pole. What does Peter Kiernan say?
Well, here's where I'll be consistent. If you look at what they did in the last quarter, pretty underwhelming. They missed their own targets. Far more telling to me is that they narrowed the vision of the next quarter as well. They're going to be 1 million fewer than the street had forecast for the coming 3 months. That's not great for me. The way to look at this super volatile stock, if you're going to buy it, look for it on the dips, because if you look at all the volatility characteristics, they're all there. I'm really troubled by their inability, particularly outside the United States. Outside is where all the action is, pretty mature in the USA. They're still the #1 streaming company in the world, but this next quarter growth is a little disappointing to me.
Liz, you were firmly in the don't touch it with a 10-foot pole camp, weren't you, on Netflix?
Yeah, I'm just looking at the balance sheet because I covered corporate accounting for the Wall Street Journal, and I like the balance sheet. And I'm looking at their off-balance sheet debt. You add it all in, it's $12 billion to $14 billion against $1.5 billion in cash. They need to buy content to attract those subscribers. So they either have to borrow more or go into the secondary with a dilutive stock offering, which will weaken the stock price further. They're not back to 2014 levels.
As well, which is good.
Look, I can't read a balance sheet. But an accounting friend told me this morning that Netflix has $12 billion worth of content, which they only pay for when they use it. In other words, that's a liability.
It is a liability, that's right.
And
they don't know the quality of that content and whether or not that content will draw in new subscribers.
Right. Well, it's down $13 at $85 a share. It's been there just about all morning. And the I wouldn't touch it with a 10-foot pole camp seems to be winning at this point. All right.